My screen okay, Hafsa?
Yes, Elizabeth, we can see your screen now.
All right, awesome. Well, thank you guys for your patience in getting started. So today we are going to talk about S Corps and why they are the best business structure that you probably never heard of. So welcome to Collective's webinar. Here at Collective, we do love our S Corps and we do think that they're an amazing business structure. My name is Elizabeth Mullins. I'm one of the new business advisors here at Collective, and I'm also an enrolled agent, which is a credential through the IRS. I have about 6 years of experience working in taxes, and prior to joining Collective, in my past life, I worked as a power of attorney for many years. So I negotiated with the IRS and state taxing authorities on behalf of my clients, a lot of whom were small business owners, and just with the goal of resolving their tax liability. So that's why I'm super passionate about what we do here at Collective. We support small businesses and I'm all about it. So as for our agenda for today, we are going to go through self-employed tax basics and why they're so expensive, what is an S Corp and how it helps you save on taxes, why to start now, how to get started with an S Corp, and then we'll have, again, a Q&A section at the end. So please put all of your questions in the Q&A box and not the chat. It's really hard to keep track of both, and we don't want to miss any of your questions. So what exactly is Collective? We are the first all-in-one back office platform designed to help self-employed people. So we're the host of this webinar and we're self-employed tax experts. So let's go into a bit more detail on what that means. This is kind of a visual representation of your money when you're self-employed. As you can see, there's a lot going on here. And honestly, it can be quite overwhelming because when you are self-employed, you have to manage all of these different things completely on your own. So you have to worry about setting up your business entity, paying your taxes, staying in compliance with your estimated tax payments, bookkeeping, and then not to mention things like how do you get healthcare? How do you save for retirement? And this is all on top of actually running your business and doing the work that you're passionate about, that you're contracted to bring revenue in. Now, these are all those little bubbles when you need to make a financial decision. Things become even more complicated and overwhelming. And you kind of realize that all of these little bubbles should be working together cohesively in order for your business to run effectively. This can honestly be really, really confusing, especially when things are a little bit disorganized and all over the place, which is honestly to be expected because you're not an accountant, as we just saw. You guys are real estate agents or software developers, marketing consultants, graphic designers. You're not tax experts, which is why our team of tax experts here at Collective can help you turn this little frown upside down. So this is your money at Collective. And as you can see, it looks a lot happier than the previous slide. When we say that we're an all-in-one back office platform designed to help self-employed people, this is essentially what we mean. So we take all of those pesky bubbles that were floating around randomly and we bring them together in one platform. So we take care of your business formation, accounting, taxes, and your bookkeeping. And as I mentioned, we're a team of tax experts. So we're real live people who are there to support your business. If you sign up with Collective, you will have peace of mind because you know that you'll have your money in one place and the support of a team of credentialed tax and financial professionals to help you make difficult financial decisions. So now we're going to launch a poll, and it's just going to be asking what you're struggling with most right now. Is it going to be like setting up your LLC, your taxes, your bookkeeping, finding ongoing financial advice, or retirement and benefits planning? And I'm just going to take a sip of water while you guys vote on that. Okay. So next, we're going to talk about self-employed federal tax basics and why they're so expensive. But before we really jump into it, I want to go over a few things that are important to understand. Firstly, what is a pass-through tax structure? So these are going to be any business that is taxed as a sole proprietor, partnership, single or multi-member LLC, or S Corp. And these pass-through tax structures, these businesses don't pay income tax. All profits pass through to the owner's tax returns. Taxes are paid on profit pass-through. Distributions are not taxable, and there's no double taxation. So when I say there's no double taxation, I'm basically comparing it to a C corporation where the business pays taxes on the profits and the owners pay taxes on the dividends or whatever they take out of the business. What we love about pass-through tax structures is that there's no double taxation. So basically, your business profits pass through to your individual tax return, and you as the business owner pay taxes on the profit for the business. Now, here we have the types of taxes that self-employed people pay. So income tax, and that's generally what you think of when people say taxes. Individuals pay between 0% and 37% in income tax based on their tax bracket. Self-employed individuals also pay self-employment tax. That is a flat rate of 15.3%, and it goes towards Social Security and Medicare tax. As a W-2 employee, half of that 15.3% is going to be paid by your employer. So they will pay 7.65%, and the other half is going to be paid by the employee, the other 7.65%. Obviously, if you're self-employed, you have to pay both halves. But let's see why self-employed taxes are so expensive. So Social Security and Medicare taxes when you're an employee, again, as we just went over, the employer pays 50% and the employee pays 50%. So just keep in mind when we look at this example, because self-employment taxes are very important to understand when you're considering an S Corp. So in this specific example, we see that the self-employed individual owes $50,000 in Social Security and Medicare taxes. And again, the employee, we see that this person's employer is paying half. So they're paying $7,500 and the employee is only paying the other half. And it's just coming out of their paycheck. When you're self-employed, again, you have to pay that entire $15,000 because you have no employer to pay half of your other taxes. It is just you, and you are responsible for that entire $15,000. So now that we know about what self-employment taxes are, let's take a look at how self-employed people are taxed. This really applies to sole proprietorships and single member LLCs who do not have the S Corp election. And we'll talk about that a little bit more later on. So here at the top, we have your gross revenue. And gross revenue is the money that you make in your business from selling your goods or services. And then we're going to subtract our tax deductions. So all of the things that we spend money on in order to operate our business. What we have left after that is going to be our net income. If the net income is a positive number, then that's called profit. If your net income is a negative number, that's called a loss. So basically, if you made more money than you spent, you have a profit. If you spent more money than you made, that's a loss. Regardless of whether you have a profit or loss, because you're a pass-through entity, your profit or loss is going to pass through to your individual tax return. And then you're going to pay self-employment tax on your business profits. Remember that 15.3% that goes into Social Security and Medicare tax. And then you're also going to have to pay income tax on your business profits that have passed through to your tax return, plus any other household income. So if your business is just a side hustle and you also have a W-2 job, or you filed jointly with a spouse, then you would subtract personal adjustments, subtract the standard or itemized deductions. When you're self-employed, you're paying both of these. So you're paying self-employment tax and you're paying income tax. All right, so that is how self-employment taxes work. And now we are going to talk about what exactly is an S Corp and why we are so obsessed with them at Collective. But before we get into that, let's talk really quickly just about legal structures. So a legal structure is going to be entities that are formed in a state with the Secretary of State. Entities are generally required to file an annual report, which lets the state know who's managing the entity. This is not your tax return. The formation and informational returns are done with the Secretary of State. And this is usually a totally different group than the taxing authority. So these are also, like when we talk about entities, these are also where we get into all those confusing abbreviations where we talk about LLCs, SMLLCs, LP, GP, LLP, Inc., all of those. Those are just legal entities that are distinct and separate from the business owner that are formed at the state level. One of the most popular legal entities that we encounter are LLCs, so limited liability companies, which are formed and organized at the state level. If you have never gone through the steps to form an entity with your state, you're most likely operating as a sole proprietor. So now I'd like to just tell you guys that it is important to understand that S Corps are not a legal entity structure, but they are a tax election. So the IRS assigns every business structure a default tax treatment. And that's just a fancy way of saying that the IRS decides how each business structure is taxed. For an S Corp, you're asking the IRS to tax your single member LLC or Corp under the rules of an S Corp. Single member LLCs are automatically taxed the same as sole proprietors at the federal level, unless they ask otherwise. And this is called a disregarded entity. So this is just a reminder, this is the sole proprietor or single member LLC tax structure. So again, we have total revenue minus your tax deductions. You get your net income that flows through to the owner's tax return. You have your business profits where you pay self-employed tax, which is the Social Security and Medicare tax at 15.3%, and income tax, depending on your bracket, which is 0 to 37%. Now, if we look at how an S Corp is taxed, you still have your revenue, AKA the money that your business makes. Your revenue then goes into your salary. And remember that your salary is subject to payroll taxes at 15.3%, which is the same thing as self-employed taxes, just a different name. And then we're going to take your business operating expenses and tax deductions, and we're going to subtract your salary because your salary does become an expense of the business. And we're going to subtract half of your payroll expenses and all of your other business expenses. We then arrive at your S Corp profit or loss. Now, remember that because an S Corp is a pass-through entity, that profit or loss is going to pass through to your personal tax return. So whatever your S Corp made as a profit passes through to you, and your salary or W-2 income is going to be reported on your personal income tax return as well. So your total personal taxable income is your salary plus the profit from the business. And then you're going to pay income tax on that, plus any other income, minus personal adjustments, minus your standard or itemized deductions. So remember before, when we looked as a sole proprietor or single member LLC, we were paying self-employment taxes at 15.3% plus income tax on all of our earnings. Now as an S Corp, we're paying payroll taxes at 15.3% only on the salary portion of your earnings. So I like to think of S Corp income in two buckets. Bucket one is going to be your salary. And your salary is subject to payroll taxes, AKA Social Security and Medicare tax at 15.3% and income tax. Bucket two is going to be your business profits, which are not subject to Social Security and Medicare taxes. You pay income tax on this money, but you still have access to these funds through distributions. So it's not like you have to try to live on the salary portion only. You just take a distribution, which is just a transfer from your business bank account to your personal bank account. And you can take them. We recommend monthly distributions. We do monthly payroll runs, but distributions are basically just meant to supplement salary, but you do not have to pay self-employment tax on those. So now let's take a look at another graphic that shows the difference between paying yourself a salary as an S Corp owner or operating as a sole proprietor or single member LLC. So the person in this example has $150,000 in profit. And remember that profit is your revenue minus your expenses. We see that the sole proprietor or single member LLC has $0 in owner wages because they're not on payroll. And we see that the S Corp owner is going to pay themselves $50,000 in salary. Now we see what is subject to the self-employment or payroll taxes at 15.3%. For a sole proprietor or single member LLC, all of your earnings, the entire $150,000, is subject to self-employment taxes. As an S Corp, remember you're only paying the payroll taxes at 15.3% on your salary only. So only $50,000 is subject to the 15.3%. So remember the two buckets that we just talked about. So obviously your total tax is going to be a lot less because there's just less money that you're paying those Social Security and Medicare taxes on. So for this example, it's a tax savings of $15,350. And I don't know about you, but I can think of a lot of way better things to do with $15,000 than to pay it to the IRS. Now, this just shows your total pass-through profit. With a sole proprietorship or single member LLC, all of your profit passes through. Whereas with an S Corp, because we're paying ourselves $50,000 in salary, only the remaining $100,000 in business profits will pass through. And if you'll notice, the total taxable income is the same. So, which one is best for you? An LLC is typically going to be best for individuals who are new to business with very little earnings. So while you're still kind of like ramping up your business and building up your clientele. So if you're earning less than, this is $80,000, but really $60,000 is a good minimum recommended threshold as well. Like $60,000 is a really good time to start planning and thinking about an S Corp. But if you're earning less than $60,000 to $80,000 in profit per year, and you just want a really simple, straightforward tax structure, then an LLC is going to be best for you. An S Corp is going to be best if you're earning more than $60,000 to $80,000 in profit per year. If you are looking to maximize your retirement savings and you have enough cash flow to make regular payroll runs. So we talked a little bit about getting a salary, but how much do I pay myself? So reasonable compensation is kind of an IRS buzzword, if you will. We've included a screenshot from our collective dashboard, which is a slider module that shows the two areas where you're trying to strike a balance between with reasonable compensation. So obviously we want tax savings, but we also want to have defensibility with the IRS. So I would strongly encourage you to seek out advice on this. It's such a gray area with the IRS. And there's no specific standard. It's purely facts and circumstances. But it's generally accepted that between 35 and 45% of business profit kind of passes the smell test with the IRS. Again, it's not a set formula. It's just how the numbers usually shake out. Your tax professional can help you settle on a reasonable salary figure. So I always just urge people, please talk to a tax advisor on this, whether it's with Collective or elsewhere. It's just such a gray area, and it's just good to get a professional to help you with it. So how does the money work? How do you get money out of your S Corp as the owner? So you have your business income, which is the money that you make, and then you have your operating expenses. Then you have your payroll or salary that we help you pick, and you can take distributions. So again, distributions are meant to supplement salary, so you don't have to worry about trying to live on your salary portion only. You basically, again, you just transfer money from your business account to your personal account, or you can write yourself a check if you want to do it that way. It's just taking money from your business account. You also have reimbursed business expenses. So basically, when you're an employee of your S Corp, you're able to be reimbursed in a tax-free way for certain expenses, like the use of your home office, a portion of your cell phone bill, a portion of your internet, even miles that you drive on your personal vehicle. A key takeaway here is that you're not limited to your salary only. You have other options. So when to switch to an S Corp? How do you know an S Corp is right for you? The general guidelines are, if you're earning $60,000 to $80,000 profit annually, and remember that profit is your revenue minus your expenses. So it's not that you're making $80,000 in revenue because that's what you're taxed on. So if you're in this range of $60,000 to $80,000 regularly, it's a good time to start thinking about an S Corp and upgrading your tax strategy in order to ensure that you have the most tax savings. You also want to ensure that you have the cash flow to run payroll regularly. Remember that reasonable compensation is a requirement of an S Corp. So you want to make sure that you're able to sustain those monthly payroll runs. And finally, that you're ready to go all in with your business. An S Corp wouldn't be a great choice for someone who's only going to be self-employed for the next 6 months. And this is primarily because there's setup work involved and there is more paperwork. But if you're going to be self-employed for the long run, this would be a great option for you because it's an investment in your business that's going to set you up for success for years to come. So how do you get started with an S Corp? What do you need to do? So the first step is going to be to set up an LLC. You can't go from a sole proprietorship to an S Corp. And that's because sole proprietors don't have what's called tax flexibility, meaning that the IRS has decided that sole proprietors don't have the ability to request to be taxed in a different way, whereas with an eligible entity formed at the state level, you do have that flexibility. So for an S Corp, you must first have an eligible entity, which would be an LLC or a corporation. So for an LLC, file the articles of organization with the Secretary of State, and then you file other state required paperwork. You get your LLC operating agreement. And then you do the S Corp election. We will get the EIN for you with the IRS. You're going to file the S Corp election with the IRS as well. And then you register for a payroll account. As far as tools that you're going to need at the very least a bookkeeping software and a payroll software. And then you're going to want to set up money flows. So a business bank account, a business credit card, change expenses, and you're going to want to change your expenses and customers over to your LLC instead of your sole proprietorship. So if people are paying you as an individual, as a 1099, just through your name and social security number, you're going to want to have that changed over to where they're paying your LLC and your EIN. All right, and for ongoing operations, you're going to need to file business and personal tax returns, both on the federal and state level. If you do live in a state that requires state tax, you're going to have to file payroll returns, and you'll need to maintain the entity. And you're going to do that by filing state paperwork, keeping up the books and tax obligations. You got to maintain your books monthly, and you have a requirement to pay estimated taxes quarterly on the federal and state level. So, are you thinking about switching to an S Corp? We are going to launch a poll that is going to ask you if you're in or not just yet, or if you're not sure. Okay. So here are your S Corp finances. Okay, cool. So we got a lot of people. Sorry, I just got the poll results. We got a lot of people that are interested. So 38% interested, a couple people not sure, a couple people not ready yet. That's okay. So here are your S Corp finances without collective. You have your S Corp setup, calculating reasonable compensation. You now have to file your S Corp tax return. Things are honestly just kind of all over the place and still probably a little bit overwhelming. Now here you have your S Corp finances with collective. We take care of all of those aspects of setting up, running, and maintaining your S Corp, and we bring them all into one place. And honestly, we are S Corp experts. So we really understand all of the nuances of an S Corp. So again, you can focus on the work that you're passionate about and let your team of financial experts handle your paperwork. So where is Collective? Right now, we are available in 11 states. They're displayed on the right side of the screen, but it's Arizona, California, Florida, Georgia, Illinois, Massachusetts, Pennsylvania, Texas, Utah, Virginia, and Washington. By the end of the year, we are hoping to be in every state. So we are working on it. And who is a good fit for us at Collective? Would be sole proprietors, single member LLCs, LLCs that are already being treated as S Corps, businesses that have $60,000 or more in profit, real estate professionals in certain states. Members that we are not able to work with would be individuals who have C Corps, multi-member LLCs, professional licensees, or if your profit is under $60,000. So let's talk about what Collective actually does. So what your first year at Collective will look like. First off, we are going to do the S Corp formation. So again, that's going to be the entity formation process where we form your LLC, we create your operating agreement, obtain your EIN, file the S Corp election, employer registration with the state, and reasonable compensation guidance. Bookkeeping and payroll setup. We set up your bookkeeping tools. We offer bookkeeping training. We will run a profit and loss and teach you how to read and analyze it. We'll set up payroll and we'll run your first payroll with you. And with that profit and loss, we'll actually send you one of those every month. So that way you have full visibility of everything going on with your business. So monthly bookkeeping and financial support. We will categorize all of your transactions, compare your bank and credit card accounts to ensure accuracy. We have an expert review of financial statements, monthly financial reports package, reminders to file important state paperwork, and a team of finance experts you can message with questions or for advice. And then as far as taxes go, we will calculate your quarterly estimated taxes and we'll send you reminders for those. We will also prepare your tax returns, business and personal, for federal and state for you as well.